got a very simple message for you today. There's no PowerPoint, there's no slides, it's just me. And maybe I'll get us back on schedule here. Thank you all for coming down. Quick question, how many people are readers already? Raise a show of hands. Well, thank you very much. And thank you everybody else for coming down to check it out. I got another question. How many people are Cathie Wood fans? Oh, come on, there's one? Not one hodler in here? Sometimes, okay. Cathie Wood has lasers in her eyes. Problem with lasers in your eyes is you can't see frickin' anything. You know, how are you gonna see with lasers in your eyes? I'm not just bashing Cathie Wood. There's a reason for this. My recent soapbox has been what I call empiricism versus rationalism. And you can all get up and walk out if that's gonna put you to sleep. But I actually think this is quite important and relevant to what we can do to make money. I think Cathie Wood epitomizes rationalism over empiricism. She has this idea, this laser-driven vision for the future. And empirical data, like my fund is down 80% over a year, doesn't matter because I've got this vision. I've got lasers in my eyes. And it's all so rational. It makes sense. There's this theory. It explains everything. Like a good communist can explain anything in the world based on Marxist principles. I think an anarchist can do the same. Anything in the markets is explainable by the lasers in our eyes. So I'd rather look at the data. And that's not to say I have no theories or I have no ideas or no explanations for what's going on. But it's really dangerous to stick to these, big theories, these big ideas, and ignore what's actually going on. It's easy enough to criticize Cathie Wood, but it affects us too. Put the shoe on the other foot. So you have a big idea like the central banks are suppressing the price of gold, but they're buying. So they must be accumulating gold so they can turn around and remonetize gold and they'll have all the gold and it'll go up to, $10,000 and they'll have it all, so they'll all be well-funded. Well, that's a pretty cool theory. It explains a lot. As an anarchist libertarian type, I want to think everything evil I possibly can of central bankers. So it works for me. Hey, great theory. But I've been hearing that for years. When did that ever help me make an investment decision? And if I bought gold or gold stocks because the central banks are going to come out of the closet and reveal that gold really is money after all, Basel III proves it. Well, how many times do we have a Basel III deadline that did frick all for gold prices? All right, so okay, beware of these big theories. They make for great sales pitches. There's gonna be this central bank pivot. Therefore, sign up for my newsletter and find this one tiny little gold stock that'll make you a billionaire. Beware of this. One more, and I'll get off my soapbox. I've been argued with every year for the last 10 plus years that platinum is oversold. Platinum has got to be a great buy because it's oversold, it's cheaper than gold, and it's 30 times rarer than gold. Problem is, I've been told that every year for the last 10 years. And yeah, platinum, you could say it's oversold. It's rarer than gold, but now it's cheaper than gold. I think even credit card companies are no longer calling their highest level of credit card platinum anymore. It's Azure or Zulubulu or something else, but not platinum anymore. It doesn't work anymore. And I would say the use case for platinum has changed. I don't know that platinum will ever recover that crown. The fact that it is 30 times rarer than gold is insufficient to make its price higher than gold. My fingernail clippings are 1 in 7 billion in the world. Only one human being can produce Lobo Tiggre fingernail clippings, or claw clippings as the case may be. But that doesn't make them worth anything to anybody. Matt Drudge doesn't go through my trash can looking for my fingernail clippings or other leavings. They're not valuable. The use case matters. So beware these big theories. This is why, on a riff off our friend Rick Rule, who likes to say, don't confuse the inevitable, the big theory, with the imminent. And I take that one step further, because imminent often, looks like, oh, this can't go on. How long can this go on? It's been going on for so long. Therefore, it must change. Well, guess what? That's never worked very well. I can't say never. But the fact that something can't go on forever doesn't mean that it won't go on for longer than our investment positions are viable. Consider the Soviet Union, for example. Any free market-oriented person knew that the economic contradictions of that system could not go on, but it did for 70 years. That's a long time to be waiting for the great pumpkin in the patch. So beware of these big theories. So my riff again is, forget about inevitable, the big theories. Don't even focus on imminent, because we can be wrong. Look at what's happening now. I want to know what's happening now. And presumably, if you're in this room with us today, you want to know what I think is happening now. It's not breathtakingly original here. I'm going to tell you stuff you already know. But what I'm telling you is to focus on what's happening now. Forget the big theories. Forget the predictions for what's imminent. Nobody knows. None of these guys know what's going to happen tomorrow, let alone a year down the road or whatever. And myself included, guys and gals. So what is happening now? Interesting that we had a bunch of uranium presentations before I took the podium here. Uranium is happening now. And even though recent uranium bugs are quite miffed, that the price has waffled sideways for 9 months or so, what's wrong? Well, come on. Have a sense of proportion. Look at the 5-year chart. Uranium prices are doing fine. They are in a very volatile upward trend that is unviolated. This isn't a someday kind of thing. And you can look at the macro, the theory behind it. We've got this massive adoption. We've got the BRICS countries building these things as fast as they can. You've got this huge pivot in Europe. You've got even Germany. Hell hath frozen over, or at least Europe hath frozen over in their unusually warm winter. They get it now. And even Germany is talking about, or has made a decision to keep its last nuclear power plants online when they were never, ever, ever going to consider that. So this is happening now. And the fact that uranium has been doing nothing for a few months is actually a fantastic opportunity for anybody who missed it before. You are not too late. This is a main investment theme for me. I had no uranium stocks in my portfolio when I started as the Independent Speculator in 2018. When I saw that the upturn was real and it was happening now, I go along, and now, after gold and silver, uranium is the biggest part of my portfolio. Do you have a question? No? Okay. All righty. So I won't go on too long about that. Maybe I'll have time for some Q&A later, but just this is happening now. Don't let the FUD, scare you out of uranium. The United States government has become a buyer that wasn't there before. And then there's SPUT last year hoovering up all the cheap pounds on the secondary market. This is a completely different macro setting, and it's happening now. I'm really very bullish on uranium. And the long-term contracts, that was always my key variable. The end users are now having to step up to the negotiation table to sign new long-term contracts. And spot prices never ignore that for long. This is very, very bullish. The other thing is, our good friend Brent Johnson, my neighbor down there in Puerto Rico, has made himself very unpopular with his dollar milkshake theory, which somehow got interpreted as anti-gold. But it was just a mechanism. It was a way of describing international monetary flows, the dollar milkshake. And while the dollar was rising, that was pounding gold prices, which is how this got associated as an anti-gold position. But it's not. It's a mechanism. And while the dollar is rising, that mechanism hurts monetary metals, gold and silver, yes, thank you very much. But what happens when the dollar falls? Well, the same dollar milkshake mechanism says that's good for alternatives, including the euro and including monetary metals, gold and silver. This is happening now. The Fed led the way in tightening. The Fed is now leading the way in easing up on the brakes, while the ECB, I never really believe anything a central banker says, but their guidance is for steady, which at current rates is 50 BP hikes. So the ECB is set to remain tighter for longer than the Fed. This is bearish for the dollar. It is bullish for alternatives, and that includes gold and silver. This isn't a someday. It's somewhat theoretical, but it's happening now. Okay? And I am absolutely looking to add, finding quality is always the challenge there, but I'm absolutely looking to add in this space. The other thing is a little bit of a mix. The green agenda, the electrification of the world, that is happening now. I mean, and we can argue about whether it should or it shouldn't. As a libertarian, anarchist, free marketeer, I wish the governments had nothing to do with this. It is wrong that tax incentives and government interference in the marketplace is making this happen faster than it should. But whether it's right or wrong, should or shouldn't, it is happening now. As an investor, as a speculator, I'm not out to right all the wrongs of the world. I'm out to make money. And this is a trend that's happening now. Oh, and by the way, if I get as rich as Elon, you can bet I'll take on some dragons and windmills to slay. But I need to get there first, right? So I'm looking to make money. This is a trend, an investable trend happening now. Now here's the challenge. It combines this big thinking thing, right? The electrification of the world is a multi-decade process. This makes me extremely bullish on particularly copper, because these great big copper mines are getting unpermittable even in some of the best mining jurisdictions in the world. There is a serious structural challenge for copper for decades to run. But does that mean I want to run out and buy copper stocks today? We're looking at a global recession that is becoming, I think, will become undeniable this year. And that has always whacked industrial metals, even when they're supply constrained. And if you say, oh, well, but the cost of production is X, Y, it doesn't matter. When the cost of production was 90 cents, dollar a couple decades ago, copper prices went down to 70 cents. So don't think that the need for copper, don't think that the very case for copper will give it any protection whatsoever from spot market volatility if suddenly people wake up and say, oh my God, it's not a soft landing. That's a freaking mountain, not a runway. We're going right into it. So when that happens, I would expect all industrial metals to get whacked. What I'm saying, the takeaway here is, this is very simple. What's happening now? What am I willing to do? I am willing to buy great uranium stocks now, any that are on sale or present a reasonable value proposition. I'm willing to buy great gold and silver stocks right now, any that are not oversold and so on. And fortunately, the very bearish sentiment in the market over the last year has quite a few good ones still on sale. I see great opportunities in that space. I am looking to buy the right, green battery metals, but I want to wait until I see what damage the recession does. And by the way, if I'm wrong, and if there's a soft landing, it's not like the train will be gone, I'll have missed it, I'll never be able to make money again. It means I'll pay more to get into some of these industrial metal stocks. But the long ramp up for this green story, it's huge. Given that, why take a chance now of buying a stock ahead of a panic on Wall Street, and I might be able to get it 50% off if my cost is that later on I can buy with less risk and still plenty of upside. So that's it. It's very simple messages. And oddball metals, tin, maybe titanium. Well, that's an exciting one, but keep it simple, right? Simple messages. What is happening now? Lots of other things could be, maybe, should be. I don't know. These are three factors that are very clear in my mind. And as a speculator, I love clarity. That's it. Well, uranium stocks, will they be affected in a downturn in the economy? Mostly no. The initial onset, yes. I mean, spot prices can easily get whacked. It's an energy metal, right? And energy typically sells off in an economic downturn. But that's a knee-jerk reaction. I think it would be short-lived if it happens, and it may not. If at the very same time you've got these long-term contracts coming in and setting a higher floor under spot, and it might actually be impervious. And there's also the perception, it's really quite striking to see, even on mainstream media like Yahoo Finance and places like that, they're starting to talk about this story. People are getting the nuclear story and understanding baseload power versus intermittent power. People really understand this. And so it might be quite insulated. Nothing is completely recession-proof, but I'm willing to buy now and not worry about that. And if we do get that temporary whack, then I'd love to average down. Will a downturn in the stock markets take gold stocks down? It depends on how bad it is. If you have a meltdown, 2020, 2008, where people have facing margin calls and everything gets whacked, then yes, gold gets hit at that time because it's doing its job as an ultimate source of liquidity in time of duress, and that would affect gold stocks too. If we're seeing the kind of slowly losing altitude misery that we've seen over the last year? I think not. I think gold can easily function separately. The gold stocks, I mean, in the last week or so, mainstream equities have rebounded, but the last couple of months have been very grim. And the gold stocks over the last couple of months have done well. So under the right circumstances, absent a panic, absent a sell-off that whacks everything, yes, I do think gold stocks can do well even when the broader markets aren't. I think that could be a recipe for overperformance, because if the rest of the stock markets are inflicting pain and people are looking around for what works, and hey, gold stocks are working, it could actually attract that momentum chasing money that would pile into Bitcoin or cryptos or pod or whatever. It become flavor of the day. No promises on that, but that could happen, and it'd be a lot of fun if it did.